Hello and welcome to TMS Insights for the month ended in September, which has been a good month for the market. We saw the market hit record 5-year highs during the month and a number of very good things for our portfolios. One of the stocks that reported was Soul Pattinson, another was Brickworks, which are key holdings for us, ones we very much like. Soul Pats, people will be remembering, it's 48% of Brickworks and Brickworks 42% of Soul. So they're very much related to one another. But Ben, good results from both companies?
Yeah, I've thought Brickworks probably the highlight, and you've seen a big kick up in the share price, and that's really on the back of a 20% lift in sales. We're seeing, I think, the home construction sector is starting to get some traction, and the underlying profit number almost doubled, so it was a very impressive result. Soul Pats held back by New Hope, but TPG, just a wonderful contribution from them. So I think both companies exhibiting why they should be part of sort of long-term clients' portfolios.
And Brickworks certainly helped by the abolition of the carbon tax?
Yeah, absolutely. I mean, we caught up with Lindsay Partridge this time last year, and I do remember him saying that they managed to get price increases through when the carbon price came in, and he said you probably won't find us pull those back when it gets removed. So, I think a bit of pricing, increasing margins, increasing sales, all looks good for the business.
Yeah, no, that looks really good at the moment. So
yeah,
onwards, upwards.
Now, small caps, we were talking about that before. An area that we think clients should certainly continue to have and even increase exposure to.
Yeah, look, very much. So the market in the start of this year and back to 2012 was very tightly led by the four banks, Telstra and Wesfarmers. And that was good for our portfolios. But we do believe that at the back end of 2013, our performance will come from the smaller companies. And we're seeing some of that just beginning at the moment. So one of the very best ways to do this is through the mandate we have in small caps through Adam Smith, and they've had fantastic performance, Ben.
Yeah, I mean, it's amazing when you think how strong the last 12 months has been, but the Small Ordinaries Accumulation Index only did a 4% return. Now, our small cap mandate did a 24.3% return in those last 12 months, so really good. And month to date, in September, it's up 6.2% just in the 1 month versus the Small Odds Cum, which is up 2%. Yeah. And, I really do think when you're looking at value in the market, it's easier to see value in that next leg down. Yeah. We've identified some sort of micro cap opportunities for clients who want to go that direct route themselves, which they can talk to us about. Yeah. But I still think very good investment to have.
And to understand the kinds of stocks, they're not fly-by-night.
No.
These are highly profitable companies, the kinds of which include Slater and Gordon, the law firm.
Yep.
Austbrokers Insurance.
Yep. G8 Education. I think it was purchased at 60 cents in the mandate. It's now over $3.
That's a childcare operator.
Yep. ResMed, Dulux, Invacare.
Great stocks,
great
really.
businesses.
So, and they're not going to lose their appeal.
No, absolutely.
So they look good.
Now, we also sent an email out to clients about 10 days ago now on Duet Group. It's off to a strong start since we sent that out, but we just thought we'd remind people of the case behind that.
Yeah, and it is strong. So the business itself was co-managed by ANZPB and Macquarie. They have now backed out of the management, so it's internally managed. That's a real plus. They've recently acquired their third asset, which is the Wheatstone Project pipeline, which connects in with the Dampier to Bunbury pipeline that they've had for a long time in Western Australia. They also own electricity distribution through the United Energy label in southeast Melbourne and the Mornington Peninsula. Very strong recurrent earning streams is why we like it. And even at current prices, it's trading on a yield of 7.7%. So it really does, in a low interest rate environment, make a lot of sense for a lot of people to be owning this one. Some upside in the capital, as well as a very good yield. So the top asset, Duet.
Yep, absolutely. And we're doing some more work in this sector, trying to look at some more infrastructure opportunities.
Which and there are really good investment appeal in this space overall.
Absolutely. Yeah.
Ben, we also do a lot in the interest rate securities market. People will know that.
Yep.
ANZPB is one of the best looking opportunities we can see now.
We've seen in a long time, well, in this environment in a long time, only 9 months to maturity on this one, which is unusual. It was issued in October 2008 when debt markets were in absolute turmoil. Lehman had just gone bust. And to get this issue away back then at the time, they had to offer some quite favourable terms, which we think there might just be a bit of mispricing in now. Maybe they've been overlooked. And the main one there is that as opposed to getting $101 in shares or cash back, which all of them do these days, here you actually get $102.50 in shares in ANZ or if they roll it into a new interest rate security, $102.50 of the new security. Now they're trading at about $100. They'll pay 3 more dividends between now and next June of a total income return of 3.81%. But if you add that 2.5% kicker on top of that, you're looking at a return of around 6.31%, and that's for just a 9-month time period. If you annualise that, that's a very attractive rate in this low interest rate environment. So, a lot of clients do have this, but arguably as we get closer and closer to maturity, that becomes safer and safer to invest in. And it is worth having a look at the amount you've got there potentially if you're looking for an alternative to cash.
Yeah, excellent. Okay. So do give us a call if you'd like to discuss any of these. But that's all for this section of TMS Insights. Ben Clark and Jeremy Hook wishing you all the best.